I think we're kind of like witnessing the deepest transformation like the finance function has ever experienced. So what keeps me up at night is kind of like keep up with that and drive it.
Welcome back to CFO Weekly, where we're talking with financial leaders about how to build efficiency in their teams, create time for strategy, and ultimately get results. This podcast is brought to you by Personiv, the trusted leader in finance and accounting outsourcing for over 30 years. See how Personiv's customized solutions can help you streamline your operations with teams that start as small as one. Visit the website at personiv.com to learn more. I'm your host, Megan Weis. Let's jump right in. Welcome back to CFO Weekly. I'm joined by Ignacio Nacho Redondo, Senior Vice President of Finance at Nextpower, formerly Nextracker, a global leader in solar energy technology and intelligent power generation systems. Nacho brings more than 25 years of finance leadership experience across accounting, financial planning, investor relations, and compliance, and previously served as CFO of Nextracker during a critical phase of growth and public market readiness. In this episode, we'll explore what it really takes to prepare an organization for an IPO, from building the right financial processes and internal controls to developing the operational discipline required to operate as a public company. We'll also discuss how finance leaders create transparency, governance, and investor confidence while scaling rapidly. Welcome to this episode, Nacho.
Thanks for having me, Megan.
So to start, you've spent more than 25 years across different finance roles and industries. Can you maybe walk us through your career journey and how it ultimately led you to the CFO role at Nextracker during such a pivotal stage of that company's growth?
Let me start with the fact, that I didn't have what we'd expect to be an orthodox kind of career or path to get there. I'm an engineer by education. Originally started working for Arthur Andersen in Spain. It was part of a big five at that point. Why they did that and why they hire engineers is something that totally understood yet. But they did hire a couple of engineers that promotion, and that was one of them. And then, I started working there after I had a couple of then I jumped onto an utility company doing more of an accounting role. At that point, I really thought I liked it. And so I, remained within the finance space. Did anything from FP&A, treasury controls, accounting, pretty much everything in finance and pretty much everything in different companies like industry companies, utility companies, even private equity companies. I worked for a GP, for a general partner for quite some time. So the good thing about all this experience, it actually gives me a unique perspective and vision of not just all the finance areas, but also the way different stakeholders look at companies, and either from an investor perspective or industry company perspective. I can totally relate to how they're all looking at it. So on and all, as I said, not really an orthodox way to get there. It's been a pretty amazing time and always, again, within the finance area, even though very unlikely when I started being an engineer.
Definitely unorthodox, but you would actually be amazed at how many CFOs I talk to that are from an engineering background. Definitely sounds like an interesting career you've had so far. So thinking back on that journey, was there an early moment in your career that shaped how you think about financial discipline, processes, and controls in scaling companies?
I would say there's something that builds up over time, and processes have always been, when setting up companies for scale, it's always been a bit of a common denominator of my career. But if I have to think about a pivotal moment when dawned on me that this was really something relevant, is back in my early days, 2007, started working for a private equity company as a general partner. I was a very, very young CFO at that point. Actually, my first CFO role. We started buying a lot of different companies and assets with the idea to actually do direct management, meaning there wouldn't be any executive team on the assets. We'd actually manage everything from the general partner. That was really good from a cost perspective, and it was pretty efficient, but we just didn't probably envision all the complexity that would actually take, right, in terms of managing all those companies. And we were buying anywhere from 2 to 3 companies every month. So at the end of the day, we ended up having a portfolio of over 30 companies. I sat down one day and I thought to myself, I mean, we can't manage this unless we really scale and we really make a really systematic and methodical way to manage all those companies, right? That's where my journey started with processes specifically. So it was more from an operations and practical perspective. Ended up, implementing or designing all different processes, ended up implementing SAP in that company and all different assets we had on the LP. That was probably my first contact to what I thought. I mean, again, I came to that realization by hitting the wall and understanding that that was the only way really to be able to operationally manage all the assets we were buying at that point. And from that day on, I think it's been a little bit of a common theme everywhere I've gone to. There's always been a big component of setting up the processes, even implementing ERPs. And getting companies ready, not just for, IPOs or exits, but also to operationally make them effective.
And during your time as CFO at Nextracker, what were some of the earliest signals that the company needed to start preparing seriously for life as a public company?
I wouldn't say, Nextracker was a bit of a weird kind of experience in that sense. When I joined the company back in 2018, the company had been acquired a few years before that by Flex, which was a very large public company. My mandate when I got there was to pretty much get Nextracker working in a way that they'd be able to kind of like behave as part of a public company. And so there was no intention at that point to take Nextracker as a standalone public company, take it as a standalone public company at a given point of time. There was no intent to do anything different than just remain within the Flex scope and Flex umbrella, as again, as a part of a public company. So I joined and started working on processes. All our controls were deemed to be ineffective time after time. Every time, internal audit came. So I said, hey, we got to fix this. We got to fix the way we're working. We got to make this company more efficient in a way that we can actually scale and we can actually scale with control, right? I mean, knowing that we're actually getting part of that big public company. Started working on all the processes, re-implemented the ERP, NetSuite, did a lot of work on the team, so like growing it and setting up, all the different functions. And, that was, I would say like the first year and a half or 2 years. Funny enough, what happened is we actually looked back at some point and started like seeing the market really stepping up in a big way for many different reasons that had nothing to do with the company. And everything we did to set up all the processes and kind of like set the company up for like growth actually helped a lot to be able to tackle a lot of that growing demand that was out there in the market. So we suddenly went from right about $300-400 million revenue to right about 1.5 in 24 months. Again, nothing we envisioned. The mandate wasn't really meant to be, hey, grow the company. Let's make this company behave as what it is, right? As part of a big public company. We did that a couple of years later, 3 years later, right about 2021. There was a complete change and shift on Flex management team, including the CEO. They decided to kind of like go back to basics, and Nextracker wasn't really part of the basic business of Flex. They're mostly a contract manufacturing company. And so they decided, they wanted to look for ways to monetize the company. They hired at that point JP Morgan to kind of like help on the process. And suddenly, when JPM looked under the hood, their conclusion was, why sell this on a private sale when the company is almost ready to go public? So all in all, again, without really having a perspective at any given point of time to go public, we did all the right things to get the company ready and set up to be publicly traded at some point. And not just that, but also to grow and get the scale we needed to actually go there to the public markets. And it all happened again coincidentally, but it happened in a way that actually allowed us to kind of like be ready when we got lucky, right? They often say you got to be, luck is going to get you, it's going to catch you working. And that's exactly what happened to us, right? At that point, everything kind of like makes sense, everything aligned. And suddenly we found ourselves in a place where we were actually ready to go public and start the process. So I would say it was almost like I didn't really see any of that coming until it really happened and until really got working on the S1 and started really pushing forward to that IPO.
I'm just curious, what were some of the signs that you were ready at that point?
I think first, the scale, right? And again, the scale was actually a consequence of not just the market, but also the fact that we're actually ready to tackle that market and we could scale and deal with a much, much bigger number of projects at the same time. That was one of them. The second one, in terms of like signs, when they looked at it, is when you see a company that's acting like in a mature way, right? And what I mean by that is like, we're taking decisions for the first time since like Nextracker inception in data-driven decisions. Like we had the KPIs we needed to kind of like take those decisions available to us constantly. We are live. When you're working for startups, sometimes just gathering the right data is a lot, right? Suddenly you see things like we have the data available at any given point in time. You're just going to push a button and there's going to be a lot of reports that kind of like get produced. And you're going to see all the data you need to really kind of like make sense of where the company is at any given point in time. There wasn't that much of an effort to kind of like get ready for board meetings, things like that. I mean, you can see those things happening. At the end of the day, it all comes down to you realize one day that you're really, really behaving as a pretty mature company. And again, there's like many different signs all related to, how available the data is and how accurate it is, or things like how easy the forecasting process, how easily it works, how much of an accurate forecast you get, how you're actually able to kind of like beat that forecast like time after time. Those are all signs that actually seem to point out the fact that you'll be ready to go out there. It doesn't mean every company that gets to that point is going to go IPO, but those are signs that if you wanted to, you're ready as a company.
And looking back, how far in advance should companies realistically begin preparing their financial processes and internal controls if they feel like an IPO might be on the horizon?
That's a very good question. And, most startup companies, they tend to overlook the finance function, right? And, at that stage, what's really important is to work on the product, the go-to-market strategy, all of those like really important things to kind of like get the company running. Some years later, often after they have experienced, some significant growth, it's time for their investors to look for an exit comes, and companies suddenly find themselves in an almost impossible situation, right? So going backwards and fixing processes and historical financials to make them ready for a PCAOB audit, or even to just be able to report out there to the market, it's not an easy task. And actually, a lot of companies end up failing to do it. I think in my mind, in my experience, in order to be successful, I think companies should actually start working on their processes, systems, and controls about 3 to 4 years before IPO. I know it's not easy, and I know most companies are not going to have the luxury to be able to do that. But I think the 3 to 4 years kind of like get you in a really good place. I think if you try to go IPO and haven't worked on any of it, and you try to go IPO in like 12, 18 months, that usually becomes a bit of a, I don't know if you've seen this video where they're trying to fly the plane as they're building it. That's how you feel when you kind of like try to speed it up as much as, 12, 18 months. And you go the first day, you go public, you're going to file your first Q, your first K, you take your 10K, and you figure you're not ready. And it becomes a challenge. And also not just a challenge, but the disruption to all the processes, right? Because when you're paying attention to that, you're not paying attention to the business. You're not enabling the business. You're not supporting the business as you should. You're just trying to, get things done quickly and without really having everything you need to kind of like execute. So I think, again, 3 to 4 years is probably what I would recommend for any company. At least 2 years, this is really, really needed. Like 2 years at least.
And from your experience, which finance processes tend to need the biggest transformation before a company is truly ready for the scrutiny of public markets?
I think I would say I'm going to say it's pretty much all of them, I guess. But I think the two most important ones to me are the forecasting and budgeting process. And I'll explain each one of them, and the reporting process. What I would actually call forecasting and budgeting on one side and record a report. I think on the first one, the budgeting and forecasting is really key to, have visibility on the company's future performance and have a really solid process to go out there and be able to have a good strategy for the first few quarters. What I mean by good strategy is you go out there and you can figure out the first quarter we're going to beat and raise. We're going to raise revenue or EBITDA. The second quarter, we're just going to keep the guidance flat. We know we're going to be beating it. Third quarter, fourth quarter, kind of get ready for that messaging. I think having a budget and forecasting process allows you to go out there with confidence, knowing that exactly, or you're going to get 90, 95% there, how the company is going to be performing, at least for the next rolling 4 quarters. That's going to enable almost like a perfect kind of like messaging out to the market. And that's very relevant. Again, that credibility you need, especially the first few quarters you're out there. So that's one of them. The other one, and I touched briefly on it earlier, the reporting process. And I've lived this experience where, You go out there, you think you're ready, and suddenly you have the first 10K or 10K, and it becomes a huge challenge just to be able to produce it and have all the data available and be able to report earnings to the market. I think that to me is probably the second, again, it's probably the second like biggest thing you need to do, have that process ready. What I've learned through my experience is it's probably good to have a mock process run 2 or 3 quarters prior to going IPO, meaning either your Q, your 10K, your 10K, you do it as if you were reporting out to the market and see what actually, what are the challenges, where you're getting stuck, anything that can be challenging from my timing perspective. I mean, you kind of like go and run that process like several times before you get there. Obviously, needless to say, to be able to do that, you need to have all the underlying accounting processes, procure to pay, order to cash. Everything needs to be really tight and needs to be working smoothly. Otherwise, it's really hard to get there. Close your books on time and have all the data you need to report out to the street. So I think those two, again, forecast, it all comes down to forecast and visibility and accuracy to actuals.
And internal controls and governance become much more visible after an IPO. How did you approach building the control environment needed to support that transition?
Well, I think to me, it's like two different sort of like sides of the same coin. You have controls on one side and you have governance on the other side. When I think about governance, and I'll start with that, I think as CFO is part of that process, but I think CEO needs to be really involved. That'll be anything from like setting up the right board, setting up the right committees, setting up like, the right charters for those committees. All of that is work, and hiring the right people to take care of a board. All of that is, again, the CEO needs to be really, really actively building that with the CFO and other executives at that point. And that transpires all the way down to the company and how you set up all the controls. Controls are more like in my mind, of a CFO sort of like role. And that means like, setting up all the operational processes first, as I said before, and designing the right controls. I think the approach when you're working on controls, as I said, is like trying to get ahead of a curve. Sooner the better, because the moment you start implementing controls, you're going to find some of that design is probably not effective. There's going to be gaps. You're going to be seeing every single quarter when you test them. And you're going to need time to fix and retroactively go back, fix those controls and align with the audit firm, whether there's new controls that need to be redesigned or designed, or some of the old controls need to be redesigned to make them effective. So it's a long process. It takes sometimes like 4, 5, 6, 7 quarters of testing to get there. But the approach is to start early, even when you don't have an internal audit team. I think there's a lot of consulting companies that can help you kind of like design, implement, and test controls and act as a bit of an internal audit part of a company until you get that team ready. But again, starting early enough, 2 to 3 years earlier, goes a long way. When it comes to governance and setting up, the right committees and the right board, that tends to be quicker in terms of, or you can start like later and, have a board ready just, the minute you kind of like push the button and go live and price on the IPO. But when it comes to controls, I mean, the approach again is like, look for as much help as you need. There's going to be some investment that needs to be done, and start sooner the better. The earlier you start, the better you're going to get there.
And obviously, things like technology and financial systems play a huge role in IPO readiness. So what capabilities do you believe that companies need in place to ensure that they have reporting accuracy, speed, and auditability?
I think most of all it all starts with designing the right processes, operational process, and then choosing the right ERP. Most companies are going to be ending up with an architecture where they have an ERP, and there's a lot of different satellite systems around it. They're probably going to be managing procure to pay in a different system. There's going to be either APIs linked to the ERP, or there's going to be some sort of communication between the two of them, but they're going to have like different satellite systems. In my experience, I mean, as long as you can keep within the ERP and not so many like satellite systems, you're going to be better off. And implementing a real strong ERP where it's not just a finance thing. The ERP is not a bookkeeping system. What it really is a system where all the company works together. All the operations, logistics, supply chain, they're all kind of like levering the same system. And, having them functionality actually goes a long way because everyone's working on with the same data. They're all working the same system. They're all aligned and they have an auditable trace of everything they're doing. So I think, again, like working in the same system, like pretty much across the organization goes a long way. Whether that system is NetSuite, SAP, Oracle, or any other like solid ERP, to be honest, I mean, there's like pros and cons for each one of those systems. But I think any of those, as long as you implement the ERP in a way that it kind of like goes across, the whole organization, I think you can be at a pretty good place from a system perspective. And then, I've seen this before where you talk to companies, they come and ask, what you do different here? We've implemented, this or that ERP. When you look into it, the reality is they haven't really implemented an ERP. They're using it as a bookkeeping system, but no one else than finance is actually working on it. I think those are part of the key things that a company needs to look at. They need to understand it's not just a finance thing, it's a kind of like a company overall thing. And it's really relevant for everyone to kind of like work together on it. That's the only way you can talk about the same KPIs and data without going back and forth on arguments about whether it's right data or not.
And beyond the internal preparation, the finance team also has to help tell the company's story to outside investors. So how does the role of finance evolve when you begin preparing for that level of external scrutiny and communication?
When I think about the finance function, not just the CFO, but pretty much everyone involved in finance, I think regardless of the stage of the company, I think CFOs and again, any finance professional needs to be able to not just tell the story, but support building the story. Meaning, no matter what phase you're in, you have to be a big part of that. The reason being is, I think finance has got a unique perspective of, how to connect the dots. Well understood finance professionals are going to be knowledgeable of, all the operations, how the company works commercially, what the market trends are, how they do things pretty much from an operational perspective. They're going to know the product. And they're going to be the ones who really understand how investors are thinking about things. Investors like suppliers, customers. I mean, you need to really understand how they're thinking about your company and your product, each one of them. And so when I think about finance, I think as you grow that organization, I think you got to look for professionals that have the ability to do that, regardless of whether you're a startup company or you're an IPO company or a public company at that stage. The big difference between a public company and a private company when it comes to managing investors is, when you're a private company, you have a number of investors, let's say 6, 7, 8, 9, 10 of them. You know exactly their investment thesis. You know what they're looking for. And you can always accommodate, your messaging to kind of like fulfill their needs, right? Because it's really almost like a custom-made messaging where you're trying to attract the capital you want. And you want to track, those like 6, 7, 8, 9 players. And once they invest in your company, you keep kind of like the same messaging, right? Consistently. When it comes to public markets, now you're dealing with a resilient number of investors, like both institutional and individuals. And you got to start like thinking about the company and investors in a different way. And you got to go and adapt, your messaging in a way that it actually attracts the right investors for the company in a big broad of investors, meaning it gets way more complicated because now what you're doing is you're trying to, with your messaging and with every time you go out to the street, you're trying to really, really customize your investor base in a way that it actually does the best for the company. You want to have the right investors, whether it's long investors or like, short or combination of both, but you really want to have the ones you need to have to kind of like make the company grow and being supported as a business. And so it gets way more complicated in a way, because again, you're dealing with much more complexity. But in my mind, it all starts from the beginning where you need to really, as a finance professional, you need to be able to kind of like build the story and make the story work towards acquiring or getting the best investors for the company.
And for finance leaders who are listening today, who may be several years away from a potential IPO, what early steps would you recommend that they start taking to build the processes, teams, and discipline that will make that transition a smoother process?
If you were talking to my team now, they will probably tell you I sound like a broken record. I'll go back there in the same place. I think it's all about designing the right processes and starting with that. I think thinking about, when you're a finance professional, I think one of your first mandates needs to be, hey, sit down with everyone, understand how the company operates, understand the product, understand where the gaps are, help, operations, sales, everyone in the company kind of like redesign their processes and make more effectively in ways that they can work more effectively. And once you do that and you align all those processes with them, I think at that point, exactly, how the company operates, the gaps, really, really in depth, pretty much everything that's going on the operations side. That gives you a head start to kind of like be able to design processes and design controls around it. I think that's the first step. I mean, kind of like having always that mindset of, hey, I'm not a finance professional that kind of like sits on a silo and it's not their numbers and they come up with the closing every single month and they do the forecast. No. It's way more than that. Let's go and understand everything that's going behind the scenes, and let's try to help everyone else in the company work more effectively. By doing that, I mean, you do things, you're able to kind of like really, really influence the way the company's operating and make it more effective. And the second thing, which is really important, is you're getting a lot of trust with all the organization because everyone is saying that you're actually trenches with them. You're trying to help them enable the business, enable operations, enable sales. And you're trying to make everything in such a way that you can still keep certain monetary controls within. To me, I think that's the most important part. The second thing is obviously once you have all those processes signed, once you really understand how the company operates or how the company needs to operate, implementing all that in ERP, educating everyone else in the company to kind of like work with the ERP and get everyone working around the same processes and systems.
And finally, as someone who's guided organizations through major growth phases and public market readiness, what is keeping you up at night as you think about the evolving expectations placed on modern finance leaders?
Then my response is going to have little to do with market readiness. It has more to do with how much finance roles and CFO roles have evolved for the last, let's say, 10 years. This all started the trend started way before AI was a thing. I think the CFO role 15 years ago, 20 years ago, it used to be, that person who was an expert on finance. They'd be able to provide the numbers. They'd be able to go out there and help the CEO understand where the company was at. They'd be able to help the CEO make investment decisions, but they were never really part of it, really the strategy of a company, and didn't have to deep dive on any of that. A few years ago, and I noticed that, right about 10 years ago, I think the role changed completely. The expectation for a CFO is, they drive a strategy, and to drive a strategy, they need to understand the company and the market better than anyone else in the company. They need to be able to foresee risks, identify opportunities, and find ways to enable the business. So for all of those reasons, I think the CFO role and finance roles have become one of the most complicated ones in the company. And, if you add this up to the fact that, there's a growing complexity with AI and how to lever AI to make companies more effective, I think we're kind of like witnessing, to me, the deepest transformation the finance functions has ever experienced. So what keeps me up at night is being able to kind of keep up with that and drive it in a way, and being able to, again, keep up with all those changes and the expectations, which are increasingly more complicated, and being able to have or to build a finance team and to support finance professionals that can actually get to that point where they become a really trusted advisor to the CEO and the rest of the executive team. I think that to me is kind of like the biggest thing. And, I'm late on my career. I think I'm not going to have to deal with that, all my life. But I think it's really important, and it's really our responsibility as finance leaders of today to sort of lead, all those different junior profiles that are coming, starting to work in finance, to kind of get to that place and understand the finance role is a more holistic role and understand how important it is for them to, again, go a lot deeper than just knowing their numbers.
And with that, we'll wrap up today's episode. Nacho, thank you for sharing your perspective and your experience on preparing organizations for the public stage.
Thanks a lot. It was my pleasure.
And thank you to our listeners for joining us on CFO Weekly. Until next week, take care.
You've been listening to CFO Weekly, presented by Personiv. Please subscribe wherever you get your podcasts to hear all of our episodes. Want to learn more? Check out personiv.com. Thanks for listening.